All right, guys, welcome to SPX Recap for October the 26th. I am going to go over SPX, of course, and we're also going to talk about Wyckoff here as well, because we were able to use Wyckoff today to enter a trade and get a great return. Again, my name is Vico Ramos with Prestige Trading, and we're going to go ahead and start. All right, I do want to thank you guys for joining here today. 2K and no, yeah. I do want to thank you guys for taking your time to join me today and going over this recap. Let's go ahead and begin. We're going to go over Wyckoff first before we go into these recaps, because pretty much the big play, I was able to identify Wyckoff. Okay, so we're going to go over Wyckoff first. All right, can everybody see my screen? Great. All right, so the Wyckoff method, right? The Wyckoff method is a technical analysis approach that can help investors decide what stocks to buy and when to buy them, okay? We're not gonna go over all of this. I will post these links in our Discord here later on. I'm just gonna go over some significant or some points here before we go into the pattern, okay? What is the Wyckoff method used for? The Wyckoff method is used by investors and traders to determine market trend, select investments, and time the placement of trades. It can help them identify the times at which big players are accumulating or distributing positions in a security. Okay. What are the four phases of the Wyckoff cycle? The four phases of the Wyckoff cycle are accumulation, markup distribution, and markdown. They represent trading behaviors and price action. Once the final markdown phase of Wyckoff cycle is complete, a new accumulation phase will kick off a new cycle. Okay. All right. And again, I will post these links inside of our Discord, okay? And if you're just joining, this will be recorded. Thank you so much for joining, okay? All right, so here's just kind of a picture of the Wyckoff price cycle here. So we have the oversold area, accumulation area, and then you have the markup demand greater than supply, distribution area, okay? The basic principles, 3 Wyckoff laws: the law of supply and demand, the law of cause and effect, and the law of effort versus results. Okay, again, there is a lot of things surrounding Wyckoff. It's huge. Okay, I don't know everything about it again, and you're gonna have to decide how much you want to learn about it. Okay, accumulation, Wyckoff events. Okay, I believe there's only two schematics that I really look at as far as Wyckoff, and that's pretty much all you really need to know. Okay, once you get an understanding of Wyckoff and you have enough of it to implement it into whatever your system is, you can pretty much stop there. Okay, so here it shows the phases of Wyckoff: phase A, phase B, C, D, and E. Okay, and you kind of break this up as price action is moving. You want to kind of understand what phase price action is in. Okay, so phase A, you have these sections here for phase A, okay? And here it tells you kind of what's going on as far as price action throughout these phases or these sections inside of phase A, okay? Now, I just want you guys to focus on the picture here because this is a lot of information, okay? So just as far as the picture, all we're looking at is structure, okay? Price is coming down, creating higher highs and lower lows, and then it starts to range, okay? It starts to range, and when it starts to range, it's going into phase B, okay? I'm gonna simplify this for you guys. Again, if you want to know exactly what's going on, I'm going to post these links, okay? And I know I keep repeating that, but it's just very important. My job is to simplify it for you guys so you can understand it on a simple term, okay? So basically, in phase A, price is coming from somewhere, okay? It can either be coming up or it can be coming down. In this schematic, it's coming down, creating those higher lows and lower lows. And then it starts to range in phase B, okay? And we can see that it's ranging because it has this point here, and either you can use this point here or this point here, okay? And when it starts to range. In phase C is basically a sweep of liquidity, okay? That's basically what phase C is, and that's how I see it. So price action is either going to sweep the bottom or sweep the top, okay? In this schematic, it's sweeping the bottom. As you can see, the spring, that's what they call it. In phase C, the spring price action is sweeping this low down here. Also in phase C, you begin to see the change of character happening, right? Price comes down, comes up, comes down, goes back up. That is your first change of character. And then it comes down, retests, creating a line of support, as you can show here, and then it shoots up. Phase D is basically your confirmation. Now, you're not really out of the woods here because you can enter here on the spring. A lot of people if you enter on the spring, that's a great entry. But it is a risky entry because Wyckoff is not complete until it goes through all of these phases, or most of these phases, okay? Your entry for Wyckoff is usually going to occur on phase D. Okay, if you don't enter on the spring, you just really want to wait until phase D for you to enter, okay? And phase D is basically just a confirmation or your retests, okay? Because you can see here, retest, goes up, creates that momentum, and then you have the SOS, okay? Let's go over SOS real quick because that's actually a good one, okay? SOS is a sign of strength. A price advance on increasing spread or relatively higher volume, often a sign of strength, takes place after a spring, validating the analyst's interpretation of that prior price action. Okay. So, and again, each of these will tell you what this is, and these are very good to go over. But I don't really think you need to know all of this. Okay, because all you have to do is identify Wyckoff is happening, and we don't do anything until we have a sign of strength or we have a test on the spring. If you're going to enter off of the spring, or you're going to enter somewhere over here, okay. And as you saw in the chat earlier, I think Aristotle, he was talking about, did Wyckoff already occur? Wyckoff was occurring, but we want to make sure we don't enter too early because price can fail in phase D and then shoot down, right? Because a higher low has not been broken yet. Okay, higher low does not break until the sign of strength. Okay, so any enter here is risky. Entering here can be slightly. I think we entered here, or I did enter here. Can be slightly risky, and you're really not out of the neck of the woods until you have that sign of strength, that retest off of that sign of strength, okay? Let's see. This is another schematic as far as Wyckoff. I really don't see the difference, but I'm pretty sure there is a difference. Yeah, so it looks like phase C, there's no spring, right? There's no sweep of this lower low, right? You just continue to range, and then you break out with the sign of strength, and then you retest the sign of strength. So that is another entry. And again, that's basically, what is this basically? This is basically a breakthrough of supply, retest, and go up, okay? You already see that? That is basically a breakthrough of supply, retest, and continuation. So you can see how, even though if you don't know what Wyckoff is, we're already trading Wyckoff. Everybody is already trading Wyckoff. The thing here is being able to identify it before it happens or while it's happening, so you can capitalize on high probability plays. Okay. This is another schematic of Wyckoff and showing a bearish, right? Because again, Wyckoff can happen bullish or bearish, okay? And this is just basically another one. And it's just basically just flipped, okay? And again, there's different schematics, right? There won't always be a spring, as you can see here in this one. There's no spring or a sweep. Okay, I'm trying not to, I want to say the correct terms as far as Wyckoff, but at the same time, I want to keep it as simple as possible, okay? A spring is basically a sweep, okay? And again here, this is another example. This one does not have the sweep either. This one actually does have it, but they call it UTAD or UTAD test, okay? Supply and demand analysis. Okay, let's see. Analysts of supply and demand on bar charts through examination of volume and price movements represent one of the central pillars of the Wyckoff method. So the way that I read this is basically saying that it is okay to use supply, and you want to use supply and demand within Wyckoff method. And that's basically what I do, right? This is basically saying that, hey, we should be respecting those zones, okay? Wyckoff's first and third laws describe above supply and demand and effort versus results, okay? And the embodies this core approach, okay? This is more of, volume. Supply increases and price falls. This is basically like textbook, okay? If you guys want to go in the textbook, effort equals results. Reaction number 2, price falls further down, but volume decreases, right? That's basically telling you how price reverses, okay? Reaction 3, volume increases, yet price is not going down as much as on previous reactions, and at that point, right, then you would have a increase stock or price going up. All right. I don't want to get, I don't think this is really going deep into other things. It's not necessary. Okay. Yeah, none of that's necessary. Okay. So before we continue into the recap, I just want you guys to real quick take a look at this chart one more time, because this is basically what happened here today. Everybody can see that? All right. Before we continue into the recaps, does anybody have any questions?
I do. Can you hear me?
Yes.
Oh, amazing. Hi, it's Ashley. Thank you so much for teaching, by the way.
Thank you.
That was awesome. So do you think it was in phase B? Because if it was in phase D, we would have not retraced back down to that low, no?
What do you mean?
Like you said, Wyckoff happened today, right?
Correct.
In what phase?
Yeah, so I think I called it out in the chat. So I was able to identify it in phase B that it was happening. And then once price shot up from the spring, I think someone else had said it was happening already. But I don't want you guys to enter until there's another retest in phase D. Because if you enter in phase C or phase B, price can just continue to go down because it hasn't broke this high that was, or this AR in phase A, or this high in phase B. So that's basically what I'm trying to say. But if you recognize Wyckoff as early as phase A or phase B, that's great, because usually this is going to happen in some type of previous zone. But I just want to stress the importance that you don't want to enter, the Wyckoff until phase C or phase D.
Gotcha. Okay. 'Cause I was just curious because when you said you think Wyckoff is happening, I thought you thought that it's going to break the highs. Which I was curious why you're not holding to the high if you think that it's going to break the highs. Because that's what I'm seeing in phase D. But, and I didn't take that trade. I actually took a short at the top there. That's why I was like, oh, I hope he doesn't think it's going to go to the top because it doesn't look like that to me. But I know, and you also stopped, your price target was just above, what was that?
We can go ahead and switch to it now. I think we're about to.
414.77 or 414.
Yeah.
I'm looking at my own chart, not yours, so I don't know.
Yeah, so my final price target was 4160.12. I think I had.
Which it did not hit, right?
It did, yeah. So it actually went past that. Can you see the screen?
Oh, wait. Yeah, what do you said it went past for what?
4,160.
Oh, gotcha. I'm looking at SPY.
Yeah. Oh, okay, SPY. I know, yeah, I know a lot of people, because I always do SPX.
Okay. So, yeah, 4170. Okay. Because when you said it, I thought you thought it was going to go above, 180.
Yeah, let's see here.
Because to me, when I look at this, it looks like it's invalidated. It did not break that high, therefore that was not a Wyckoff. But I understand the principle of you saying when the spring, it made that spring down and then took a huge candle.
Yeah.
I wanted it to come back down to that demand. Not the extreme, but the first one, but it did not, so I did not take it. But
okay. Yeah, 4180. Oh, you talking about this high, this up here, right here?
Yeah, like the high, not necessarily the high day, but at least that second high, like where 4180.
4180. Yeah, 4180 on my screen is way up here. I'm not sure if you can see my screen. Yeah, if you were playing for Wyckoff up there, that's a larger time area or time frame. And I was on the 1 minute. So if we're looking at the 1 minute, right, Wyckoff still occurred. It's just it didn't take all of this, right?
It didn't break our spring high or our swing high.
Where are we at?
Like a 15-minute swing high, a 1 minute swing.
Correct. Yeah. If you're looking at the 15-minute, it did not break. This here, 15-minute, it did break here. But it's kind of up to you on what structure that you want to use, right? Because you could say that, just using this, right? If you're just going off of that, or somebody will say, hey, I'm going to use this right here, even though it's small, right? So when I drew this up, it was on the 1 minute. So this play, I don't think my target would have been 4180, and that's why my target was that 4160. Yeah, I see.
Yeah, that was great.
Yeah, I definitely see what you're saying.
Now I know when you're calling that out. I don't say anything. I'm just like, whoa, that would be huge.
Yeah.
Because that's essentially what it's supposed to do, right? Like that means that it's breaking. Really, this is like a mini. We're just seeing like mini 1 minute Wyckoffs.
Correct. Yeah. If you wanted to see Wyckoff on a larger scale, then you would have to chart it out on a higher time frame, and then your target will probably be that 4180. But because we did Wyckoff on a smaller time frame, we're not looking for that high of a move.
Fair enough. Okay. Yeah. Thank you for clarifying.
Yeah, no problem. And hopefully that makes sense. I could be wrong, but that's just how I see it. All right, guys. We're going to go ahead and we're already here. I'm going to start from the beginning before all this on SPX. And again, I'm going to start basically straight from the beginning, exactly how I do it before market opens on the 15 minute. Okay. There's really no reason to go above the 15 minute today because we already know that price is bearish. We already know the last few days we've been trending down. If you don't know that, then at that point, then you would go to a higher time frame, maybe the 1 hour or the 4 hour, and you can just look at structure, right? Structure is telling us we're heading down. I drew that earlier. That does not. Okay. So 15-minute time frame before market opens. The first thing that I am drawing out is where we were the day before. Okay. So just by looking at this on the 15-minute, I'm going to mark the area before or the last area before market opens, right? I'm not going to go into the exact candle here because it's all consolidated and it really doesn't matter because price did not really pass this area. Okay. Now on the lower time frame, price did fill that gap before continuing down, and that's great. So if you actually do want to redefine this area, you can definitely use this right here as your zone. Okay. Now, if you're asking yourself why that candle, it really doesn't matter because this is all ranging, right? At least from like right here. Okay. That would be a break of structure. You could mark this here, but we're gonna go ahead and take this here because price opened up below this area. Okay. So that's all you got to do on the 15-minute. This is the 5-minute, but on the 15-minute, you're just marking the area, okay? Because price opened up lower. So at that point, when market opens, we're going to go down into the 1 minute because that's where we like to do our entries. And we just let price develop, okay? As you see here, market opened here in this area, shot up, and it kind of filled this gap, and then it rejected, came down, okay? It did not quite pass this area here. And what I like to do is I just mark my levels as price action is moving, just to give me a visual of what's going on. Okay, so price came down, went back up, wicked it, multiple wicks here. So if you wanted to, you could have entered here. This would have been a great entry. I probably would have set my stop loss at the half of this or just at this candle here, and we would have been targeting this area here. Okay, so that would have been a great entry. Or if you like the higher time frames, the 15-minute or the 5-minute, as you can tell over here, price came back into this area and you could have entered on. So this would have been your rejection, and then you have another break of structure here, and I probably would have entered probably somewhere right here. Okay, so that would have been another great entry. Okay, if you wanted to, if you do support and resistance, you have this here, right? We have resistance turn support, or well, let me make sure that I'm correct. Okay, you have support turn resistance, right? So this is your support at one time, turned into resistance, and then you could have entered here as well. Okay, just like that. If you don't have a candle to set your stop loss, you kind of just set it to whatever your account is or whatever you want to risk at that time. Okay, so don't really pay attention at these stop losses here unless it's a particular candle. But if you ever see something like this or like this on my charts, know I have a stop loss. It's just not always defined. Okay. And when you take these entries, right? Usually what I do is, for example, here, my first target is going to be a break of structure, okay? So if price came back up here and I took my entry here in this area based off of this candle and this rejection of zone, my first price target would be here at this break of structure, okay? What I usually see is that when price has that first break of structure, it usually comes back up, okay? And that's why I don't like entering on break of structures, because price will do something like this, go back up, and people freak out and they pull out their money, and then price goes like this, okay? That makes sense? I know some people will wait for a break of structure as confirmation, but this is what usually happens once there's a break of structure. It doesn't happen here at all, which is great, but I see it happen all the time. Okay. Now, all right, on to the nitty gritty. Again, I'm going to go ahead and show the chart real quick. Okay. This is basically what I saw on the 1 minute time frame. Okay. So I just want you guys to take a look at it real quick, and then we're going to go, and I'm not going to mark it up, but I will try to show you the areas of what I see, and then we'll try to like put the picture together, right? Wyckoff is not going to be perfect, okay? You're not going to have, Wyckoff is not always going to look like this, but as long as it has the pieces of Wyckoff, you'll be okay, okay? So here is your phase A right here, okay? You could say this whole thing is phase A, as Ashley was saying. Ashley is not wrong at all, because on a higher time frame, she's targeting this area up here. But because of this significant drop here, and me being on the 1 minute time frame, I'm only going to look here, okay? So phase A is this right here, okay? Or you could say maybe something like this, okay? Now, again, it's not always going to look exactly like the picture, okay? But we do have that drop. We do have something like this. And then we do have phase B being that we are ranging, right? We come down from the drop and we start to range, okay? Phase A, come down. We go back up a little bit, and then we have phase A where we're ranging, okay? It's kind of up to you to decide on how you interpret Wyckoff, because somebody might say that, hey, this is AR, and they're like, no, that's not AR, right? Over here is AR, okay? And maybe they're just looking at it wrong. Maybe they're maybe they want more structure, okay? But for me, I think this is AR here, okay? And then this area here would be your ST, okay? Somewhere in here. Again, it's not always perfect, but price did come down here, okay? And then here, all right? I'm telling you guys, I'm not gonna mark this, but I'm doing exactly that, right? I'm marking it. All right, so in a sense, we have something like this, right? Back over to Wyckoff. In a sense, we have something like this. And then right here, you have the test. Now, there was really no test. You really got a huge push out of here. Your test did not come up until up to here, which is fine, because if you're also using supply and demand, we had a gap right here. Price shot up, it gapped. Price filled that gap, right? Because price has to fill the imbalance, came down, spring, and then price comes back up. We can still use this area. I mean, it's invalidated, right? But I've always talked about how prices sometimes respect areas that are already been taken care of, or maybe it came to respect this. So actually, we can close this here, and this is a small zone, maybe on a smaller time frame. Okay, so, and look at that. So we have that test here, This would be your test. It's crazy how you find different ways you can look at your own stuff that you don't see in live market, right? So make sure you guys are back testing, okay? Back test your own material, even if it's a great play, right? You want to back test those 100%. You want to back test those 50% and 40%. Don't just back test the ones that you fell on, okay? So we have the test here, and then there's really the sign of strength, I guess, would be you're breaking this area here, right? So up here would be your sign of strength, this area here. And then we take off, all right? So that's pretty much how I saw Wyckoff on the 1 minute time frame. Okay, any questions? You guys are really quiet today. I feel like I'm doing something wrong. Oh, 1 second, guys. I gotta take this phone call. Yo.
Alright. No, I'm not about to leave.
Hello?
Yeah.
What's up?
You ready?
Yeah, give me like 5 minutes.
Alright, you studying?
Yeah.
Alright, boy.
Bro, you low-key sound like RZ. Now we're just listening to the masters. Okay. All right. Thank you so much, guys. All right. Does everybody see that, how this played out? Is anybody have questions? I don't want you guys tomorrow to be like, oh, Wyckoff, and hop in. All right. I want you guys to go back, learn this. I want you guys to go back, learn this, get this down, figure out your interpretation, how you're going to put this into your system. Okay. I don't want you guys to go tomorrow and be like, Wyckoff, and boom, right? And then it doesn't work. Okay. Definitely don't want that. Okay. Okay. So, and I also did do the Fibonacci here. Anytime there's a significant move, I do tend to every once in a while do the Fibonacci, only because 50% price action really does react to the 50%. Okay. So we have a number of systems here that I used in order to figure out price was turning around. Now we can also do supply and demand like we normally do. Like I'm pretty sure if I cleared this off and I find my change of character and my break of structure, I could have took an entry, right? But Fibonacci and Wyckoff gives you that extra, what's the word? Confirmation. It gives you that extra security or level of security, or that, hey, I'm on the right path. Okay. I did not enter on each and every one of these entries. This is just possibilities of where you could have entered. Okay. So I did not enter at the spring. I did not enter down here. This is the only entry that I took. Okay. What's going on, everybody? Welcome. This is recorded, so if you're just now joining, thank you for joining, and this is recorded and will be posted later. Okay. And again, I just want to go over risk management and stop loss. Okay. Just real quick. So once I took this trade, right, your stop loss is here, right? I use this zone here as my stop loss. You could have used this wick here. You could have used this, or whatever your stop loss may be, according to your account, 5%, 7%, 10%. Okay. Now, as price is moving up and create your first break of structure, your first TP, right? You can move your stop loss up how you want to. Okay. Now, I have created a system called a trending stop loss. I'm not sure if this is already a thing. It's just something that I've seen, or maybe something that I was like, oh, okay, well, it seems like price is always doing this. Price is always coming back down and respecting this trending stop loss. So if you ever see a red line that is almost like a trend line, that is actually my stop loss, okay? And I do it based on zones, okay? So even though that this is price is coming out of this zone, I went ahead and used this wick. I typically don't use this wick, but because price came out of the zone, I decided to use this wick, okay? So this isn't really a good example, but if I go over here, right, this is a zone. My trending stop loss for if I took an entry here would be like this, okay? And then if you have a regular stop loss, of course, regular stop losses are horizontal. So if you ever see a stop loss that is, or a line that is red, that is a trending stop loss, okay? And that's only as long as price has momentum, okay? You cannot use this if price is, you know, just going like this, okay? We want price to continue to push up higher above this trend line or this stop loss trend line, okay? If you guys want to implement that into your system, you can definitely do that and try it out and see if it works for you, okay? So if you ever see two red stop losses, that's pretty much it. Now, as far as management, as far as staying inside the play longer, you want to make sure that as price is moving, that you're moving up your stop loss. Now, you don't have to physically do it. You don't have to show it on the map. You don't have to keep doing this, right? Every time there's a break of structure, you want to mentally note or take your horizontal stop loss and set it, right? Because price came down past the horizontal stop loss, but it did not break my trending stop loss. So I stayed into this play, shot back up, right? And then we bounced off and went up to the stop loss, to the target. Okay, that allowed me to stay in this play, and it still at the same time allowed me to have a system in place as far as risk management and stop loss. This is where another member of the group called out a play, and I did notate to him that this was a good entry, right? This is a great entry because it's one, it's following trend, two, it's inside of a zone that was created, and three, he also marked the trend line, okay? So this would have been a great entry. And if you're in this entry, right, your first break of structure would have been this here, and then you would move your stop loss up, okay? And I gotta give you some money now. All right, guys. So, and that's pretty much how you keep yourself inside of a trade when, one second, guys. That's pretty much how you keep yourself inside of a trade when it's going on for so long, right? And especially when a trade is past your final TP or your PT, you want to either pull out of that trade because your plan has been executed, okay? We don't want to get greedy. If you find yourself still in your plays past your plan, that may be a sign that you're being greedy. And it's okay, everybody's greedy, but you want to be able to recognize that. And if at that point you want to make sure that you're using structure and you have a tight stop loss.
That's why you utilize your headphone. Then it'll be on your head.
The information about work as part of your finger on red dot.
All right, so hopefully he'll come back. I went in and just removed him because I guess he wasn't paying attention. Hey, Mace, are you there?
Is he talking to me?
Yeah, you just go ahead and mute yourself. We can hear you.
Oh, my fault.
Yeah, it's all right. Thank you. All right, guys. So as we're going up and price is still moving higher, we want to make sure that we're moving up our stop loss. And then at that point, you also want to go into a higher time frame and figure out where price is going. Okay. Anytime that you're in a play, you always want to figure out where is price going. There's nothing on the 1 hour. So on the 15 minute, we have this here. Okay, that's kind of huge. 5 minute, okay. So right here. Okay. 3 minute. Nothing really. Okay. So my target would have been this area here. Right. And as you're going from higher to lower time frame, it's okay to mark your, add zones and remove zones, kind of like how I just did. I'm pretty much showing you guys exactly what I do, okay? So price shot up past this 1 minute supply, and then it kind of tanked. So after it failed this retest, this is a retest right here. After it failed this retest right here, and it came out of this zone, this is where you sell, okay? If you were in calls. Look at this, guys. What's that? All right. I talk about these candles all the time, right? That would have been a great entry. I talk about, at this point, we've all done it. This time I made sure to mute from the device settings. My tolerance is unpredictable. All right. I talk about these candles all the time. So make sure that when I don't want you guys just to enter on these candles at any time. You want to enter on these candles after momentum when they're near a zone or within a zone, because these candles do happen as price is moving. Like for example here, and you did have a small shoot up, but you want to make sure that you're entering these candles in a significant area, okay? Because I talk about these candles a lot. I don't want you guys to be like, oh my gosh, a candle. Okay. So I know somebody got 80% off of this. Somebody did catch this in the chat, and they got about 80%. Okay. So I do have a question for you guys. If you did enter here, right? Your target is going to be mostly all of this. Why is that?
For me, it created trendline liquidity, so I knew that he could take that out. I got in on that second little doji part, so not the perfect entry, but it had just gone up with no real, like a little healthy pullbacks, but you could tell that it was ready for kind of some liquidity sweeps. And that first part was really unhealthy. That last spring, just like after your green, after your target there, like that was kind of unhealthy. So there was definitely an imbalance there. So I knew that it would at least take out that part, yeah, to there.
Yep, absolutely. Yep. So internal liquidity is basically what it's targeting, right? Unhealthy price action. Yep, I agree. Ashley, thank you so much for coming forward and speaking and participating. Thank you so much. But yeah, everything she said was correct. So that is exactly what we're targeting. Anytime price has a significant push up, I'm not always saying to expect it to go down, but that's what you're targeting if it does go down. Okay. As like, for example, this here, right? Price shot up and it hit this level here, and then it goes back down. Same thing that happened yesterday, I'm pretty sure. And I believe in my last recap, it was a huge number of unhealthy price action. I'm trying to see if I can find it. I think it was this here. Like you can see these imperfections that were being created, and that's all unhealthy price action. Okay. Anything, a gap? Go ahead.
I have a question about your little your gap theory. If you see it on SPX but you don't see it on SPY, do you still consider it a gap?
So what I would say is trade what you see, because I've seen it multiple times where I will see a huge wick just come out of nowhere on SPX, and then I'll be like, guys, did y'all see that? And then you guys will be like, no, I didn't see anything. But on SPX, it's a huge wick, and vice versa. So if you're looking at SPY, just do the SPY chart. If you're on SPX, do the SPX chart. But yeah, I've seen it happen multiple times. Does that answer your question?
Yeah, fair. And I was kind of just curious because I noticed them sometimes. I think when they happen on SPY, then they like definitely get filled, or QQQ, they like definitely get filled. But I noticed sometimes on SPX they gap and they don't gap on SPY, which is always interesting. And I'm not sure if sometimes it's just like a trading view error or.
I think it's because the number of people trading SPX versus SPY is different. A lot of people are trading SPY versus SPX because SPX is more expensive, and I think that's where it shows on the chart that hey, it's actually a gap versus price actually shot down and came back up. SPX and SPY is not always the same. Correct. Yeah, but it's pretty close. But yeah, that's it for SPX, guys. We're gonna go ahead and move in over to Meta real quick because I don't want this to be too long because people on YouTube do not have what's the word? Attention spans. All right. Again, guys, thank you guys for joining, taking your time out here today to come learn with me. So this was a collab with Nez. I pretty much went into the Genesis chat. If you do not know, I am in the Genesis chat. I do support Genesis Academy. So if you guys are thinking about joining them as well, you can definitely do that. Nez is a great teacher. Okay. So he pretty much predicted that price was going to go up and then go down, okay? And I believe he was on the 4-hour, and he really thought that price was going to go as far as up here and then drop. But as you can see, it still had that same effect. Price came up to here. So you can use this here because, I mean, you can use, I don't know why this is so off, right? So this is the last supply area. So that's basically what happened, right? So that was Nez's theory, okay? And that's earnings. So you really can't do anything at that point as far as earnings. I don't want to really, we can just move on into the opening because if you took puts or if you took calls, there's pretty much nothing else that you can do until price opens up. So once again, I'm going to actually clear this out and just to start from scratch, okay? So the first thing that I did here before Meta opened up was use the Fibonacci. And the reason why I use the Fibonacci is because we have this candle here that is just showing us a huge movement of price, right? So you get the Fibonacci out and you just click the top here to the bottom. And I did that wrong, my bad. So from the bottom to the top right here, okay? So we all know that this area here is your kill zone for the Fibonacci, and price opens up here. Where does price open up? Today, Wednesday, Thursday. So price opens up somewhere here, okay? So basically all we have to do is, if price is not breaking this right here, okay. I'm gonna draw this out as well. Okay. So price opens up, comes down a little bit, comes back up, does all this, and shoots back up, okay? Once price is in that kill zone area and has some type of rejection, this is where you can enter, okay? And we're targeting, right, bottom of the Fibonacci, okay? That's if you were able to capitalize on this on opening play, okay? Again, that was the 15-minute. I always start on the 15-minute, right? Again, use the higher time frames to figure out trend, okay? Okay, look at this here. Remember, we have to look for left to right for our targets, right? When we're looking for previous zones, supply and demand, we're looking for targets. We're looking from left to right. We need to target these here, okay? These wicks, okay? You can also do this here as a overall demand area, okay? Now, I missed this. I didn't catch this. So we're not going to really talk too much about it. I just want to show you that this would have been a great entry. Now, so because that we missed this entry, right, we're not going to chase any money, right? We do not chase money here in prestige trading. Chasing money, you'll get an L chasing money, right? Everybody agrees? So what we have to do is figure out where is the next entry, okay? Where's the next possible entry where we can enter this, okay? So we're looking for maybe a support resistance, maybe some type of zone, supply rejection, or a demand rejection, anything like that where we can enter this play, okay? So we know price came off of the 50, came down, came back up, rejected, came up, rejected. Now, I believe my entry, I deleted it, but I believe I was looking at this level here for that rejection, right? Or I think it was somewhere in here. So anytime that you're using Fibonacci and you have a breakout, so this would be considered a breakout play, you could have entered anytime there's a breakout. So here, you could have entered and set your stop. So there's really nowhere you could set your stop loss. You don't want to set it up way here, it's too high. You could just set it to this area here, because this is a zone that was a demand zone that turned into, that got filled, and it also came into a rejection, okay? I believe that's where I entered. Again, we just deleted everything. And then you target down here, okay? And again, if you look on that higher time frame, right here, and this area here, okay? So that's where price was going, okay? See, everybody see that? So again, my underlying system is still supply and demand, okay? And then at that point, you have your underlying system. You can add in Fibonacci, you can add in trend lines, you want to add in having your risk management and things like that, okay? Once price came into the zone, then we sell. Add it all, all right? So that's what I took for Meta, somewhere in this area, I believe. When I did take a earnings play, so when market opened, I was down. I think I was down like 500 bucks, and I wanted to make that up. And I knew that because of price action, how earnings played out, you know, price was just going crazy, up, down, up, down, up, down. So price wants to fill this, right? Unhealthy price action, okay? So once price broke this level here, we can okay, price is probably going to come down and fill the rest of this. Okay. And this was Wednesday, so we couldn't really play this, right? But price came back up on Thursday at 50% and rejected. Okay. Honestly, this was your best entry. I just played continuation. Okay. All right, guys. That is the pretty much everything that I wanted to go over. Anyone else have any last minute questions? Yeah, no problem, guys. I do think, again, I thank you guys for joining. Again, I don't do this for any profit. I don't gatekeep. I don't hold anything back. I'm not posting plays after they're done. I give you guys the information as soon as I see it. I try to as much as possible. As soon as I see it, I send it. There's no reason for me to hold anything back. There's no reason for me not to share it. I'm not hiding behind a mentorship. I'm not hiding behind courses, right? I charge a small amount to join the Discord, and that's basically because, I didn't realize how much time it takes to manage all this, right? You guys do a great job of, being active in the chat. You guys do a great job of utilizing and talking to one another. I talk to you guys more than I talk to people, my friends around me, right? Because we all have one thing in common, right? And that's to help each other and to make money and just to be positive, right? So I wake up and I'm on this chat before I even tell my girl good morning, and she gets mad at me, right? So as soon as I see something, as soon as I learn something, I share it, right? And that's kind of the thing that I have right now that I have to get over, because there's a lot of people in this industry or in this area who are, they tell you, hey, come learn this, come do this. And, then there's a price tag in front of it. And I got it. Time is money. But realize that I'm not making my money, or I don't want to make the most of my money from you guys. I want you guys to go make your own money. I make my money trading. Okay. I'm not charging $1,000 for a mentorship. I'm not charging over $100 a month for a Discord. All right. All this information can be found on YouTube. All this information can be found on Barnes and Nobles. Right. All this information can be found at a university. They have trading They have if you're in college, I'm pretty sure they have some type of club that does investing. Right. And it's all there. The only thing is that the system, okay, I don't want to get too deep into this, but in my opinion, the only thing that is holding everybody back is the system, okay? Your 9-to-5 job is holding you back, okay? The education system does not teach stock market, right? Because the elite people want to stay elite, right? When people are in power, they want to stay in power. Okay. And I'm not, at the end of the day, me not helping somebody is not affecting my bank account, right? Me sharing information is not affecting my bank account. Okay. So again, thank you. I don't want to go into it. I don't want you guys to sit here and just listen to me rant about the world, but I just want you guys to take that with you, because the next time that you want to give someone some information, I hope that you guys give them that information. It does not always have to come with a price tag. Okay. Get that feeling of, oh my gosh, I just helped somebody make some money. I just helped somebody pay the light bill. Okay. The very first time I made a lot of money through trading, I went to my godmother's house, who raised me while my parents were deployed. I went to my godmother's house and I spent money on her, right? My first $3,000 that I made in the stock market went straight to her. Okay. I didn't spend it on myself. It's just, I'm not saying that you can't, right? If you guys want to go out and spend your first $3,000 on yourself, go ahead and do it. But, That's just what I did. Okay. Again, thank you guys so much for taking your time with me. Time is very important, and you guys have a great rest of your day. Bye bye.